So I think this is continuation of fear from the Fed potentially tapering. You got the Evergrande situation, which continues to be a worry for the markets. And I think there's just overall this more bearish sentiment sneaking into the markets. In the last few interviews that we've done, we've talked about how we've seen institutional selling pressure, even when the markets were making new all-time highs. The institutions were selling and at the start of the day, then stepping away and letting the small investor move the markets back up. Bitcoin's behaving just like you would expect. If you looked at those past cycles, remember, we've discussed how in 2013, Bitcoin did this. It fell sharply, then it had a huge bounce, and then ultimately it rolled over and took out those lows. Same thing in 2017 as well. If you take out the all-time highs on Bitcoin at 65,000, you then cannot compare it to the previous cycles of 2017 or 2013. So now it's a whole new ball game. Then those people that are calling for 100,000 or higher, those then I would say, okay, that has some teeth to it. That has a potential situation. But so there's a lot to be said for these past cycles showing us the future of Bitcoin. And I think what's so fascinating about the cycles is that it's very clearly in around a 4-year cycle, right? So Bitcoin debuts in 2009. 4 years later, 2013 is the high. 4 years later is 2017 high. 4 years later is the 2021 high. So again, that's why I have so much trouble believing these people that are saying, oh, this time is different, because there's so many things that are aligning with past cycles that until I'm proven wrong, I have to go with what the charts are showing us in this respect. So I think that's important to kind of think about. If you're a Bitcoin investor, I'm a long-term bull. I think you know that, David. I've talked 500,000 as a number for a long-term price target on Bitcoin out 5-10 years out. So basically, there are lots of investors that are accumulating. The bullishness gets too big at the all-time highs or at the previous highs in 2017. And eventually you get to a point where everyone that is going to buy is in, right? And so that's the problem, is that the more bullish a group gets, the less buyers are left to buy. And what happens is all it takes is a couple sellers, whether they're institutional or individual, and there's no one left to buy. And that's why price can crater so fast. What I would recommend is what a lot of people do with their mutual funds and 401ks, which is just, literally set aside an X amount of dollars every month, whether it's 10% of your savings or 5%, and just automatically buy on the first day of every month going forward. And this way, you might buy here at 49,000, and then if it dips to 25,000, you're still buying. And then when it goes to 500, you've accumulated more. So I think that would be a one way to do it. If you're a long-term bull, just kind of set it aside and say, listen, retirement funds right here, I got 30 years to go or 20 years to go. I'm just going to buy a little every single month and accumulate. To me, it's the digital gold. It's not the future of currency. You're not going to be using Bitcoin to go into Starbucks and buy a coffee, but I do think it's a digital gold of the future.